disparities.
All right, thank you. I guess I'll start off by talking about the context of persistent racial inequality in the U.S., and then I'm going to talk about some bold, what I think are transformative policies, and then some areas in our budget which I think are very regressive in their approach towards either attaining funds. Okay, so the U.S. is characterized by a long-standing pattern of large structural racial inequality that deepens further as a result of economic downturn. For examples, the white unemployment rate is 8.5%, while the black rate is nearly twice as high as 15.8%. Over the past 40 years, there's been less than 5 years in which the white rate has superseded 8%. In contrast, there's been only 1 year in which the black rate has been below 8%. Also, nearly 90% of U.S. occupations can be classified as racially segregated, even after accounting for educational differences, with blacks more likely to be crowded into lower-earning occupations and crowded out of the high-earning occupations. Right? So this current crisis is not something that's just a one-shot deal for blacks. It seems like we're in a perpetual state of crisis. Right? Nonetheless, wealth is a paramount indicator of social well-being, and perhaps a paramount indicator of racial inequality. Although there still exist large racial disparities in income and education, there have been large reductions in the income gap up until around the mid-1970s, and there continues to be reductions in the education gap, albeit slow, as measured by the NAEP scores and high school graduation rates. In contrast, despite these improvements in both education and income, the racial wealth gap remains exorbitant and stubbornly persistent. Before the current crisis, the typical black family had less than 10 cents for every dollar in wealth of the typical white family, and the absolute racial wealth gap exceeded $100,000. The disparity is so pronounced that the median Latino and black household would have to save 100% of their income for close to 3 consecutive years to close the racial wealth gap. Furthermore, 85% of black and Latino households have a net worth that's below the median white household. So regardless of age, household structure, education, occupation, or income, black households typically have less than a quarter of the wealth of otherwise comparable white households. Perhaps even more disturbing, the median wealth of black families whose head graduated from college is less than the median wealth of white families whose head dropped out of high school. So why is wealth so important? Well, wealthier families are better positioned to finance elite independent schools and college educations, access capital to start a business, finance expensive medical procedures, reside in higher amenity neighborhoods, exert political influence through campaign financing, purchase better counsel if confronted with the legal system, leave a bequest and/or withstand financial hardship resulting from any number of emergencies. A commonly held belief is that in search of immediate gratification, blacks are less frugal when it comes to savings. But it has not historically been the case, nor is it now the case, that blacks are more profligate than whites. Economists ranging from the conservative Milton Friedman to Marjorie Gallison to the recently deceased founder of the Caucus of Black Economists, Marcus Alexis, found that after accounting for household income, blacks have slightly higher savings rates than whites. More recently, Gittleman and Wolf also find that blacks have a slightly higher savings rate advantage once income is controlled for. Careful economic studies actually demonstrate that inheritance, bequest, and intrafamily transfers account for more of the racial wealth gap than any other demographic and socioeconomic indicators, including education, income, and household structure. These intrafamilial transfers, the primary source of wealth for most Americans with positive net worth, are transfers of blatant, non-merit resources. So why do blacks have vastly less resources to transfer across generations? Well, apart from the national failure to endow black ex-slaves with the promised 40 acres and a mule after the Civil War, blacks were deprived systematically of property, especially land, and accumulated between 1880 and 1910 by government complicity, fraud, and seizures. During the first 3 decades of the 20th century, prosperous black communities and associated property literally were destroyed, by rioters in communities ranging from Wilmington, North Carolina to Tulsa, Oklahoma. The historical use of restrictive covenants, redlining, and general housing and lending discrimination were also factors that inhibited blacks from accumulating wealth. Furthermore, Oliver and Shapiro and Katz-Nelson in separate studies document exclusions of blacks from post-Depression and World War II public policies which are largely responsible for asset development of an American middle class. The biased treatment of blacks in asset markets is not limited to the past. For example, a recent report on mortgage lending and race conducted by the Institute on Race and Poverty at the University of Minnesota finds that black Twin City residents in the highest earning category, those earning above $150,000, were twice as likely to be denied home loans than whites in the lowest earning categories, below $40,000. It is also the case among those fortunate or unfortunate enough to get a loan, high-earning blacks were more than 3 times as likely to be offered a subprime loan than low-earning whites. Right? So all this is to give context to let us know that private action alone is insufficient to address these racial disparities. The most efficient way would be a carefully targeted race-based policies. If it is the case that such policies are becoming increasingly politically unfeasible, then we need a shift to more dramatic and bold policies that lead to economic security, mobility, and sustainability for all Americans. I'm not optimistic about the public will to directly address the racial wealth gap. Despite persistent racial disparities, public sentiment continues to move strongly away from race-specific social policies. But all is not lost since the distribution of wealth, as I mentioned also, is so racially disparate. 85% of black families have wealth holdings below the median white family. Wealth can be an effective non-race-based instrument to eliminate racial inequality. A shift from income-based means tests to a wealth-based means test for transfer programs, policies with eligibility based on net worth at some level below the national median would reach a large proportion of black households and could go a long way towards closing the racial wealth gap, especially if those policies include asset-building dimensions. Two bold policies. One is a substantial child development account, what Manny Marable calls baby bonds, and I think another policy, which was discussed earlier by Professor William Darrick, a Full Employment Act, which guarantees federal jobs for all willing, able-bodied Americans, would achieve some of these goals. The child development accounts would set up trusts for 50 to 75% of all newborns, with an average account of $20,000 that progressively rises to $60,000 for newborns born into the most wealth-poor families. The accounts would grow at a federally guaranteed 1.5% to 2% annual interest rate and could be accessed when the child becomes an adult for some asset-enhancing endeavor, such as purchasing a home or starting a new business. Modern electronic recording of financial data facilitates our ability to identify financial assets. Financial monitoring advances by the IRS and law enforcement agents serve as examples of the public sector's ability to measure financial assets. Further, many localities are already engaged in home value assessments. Electronic home appraisals based on market valuations of area home sales provide another example to measure individual assets. To avoid savings crowd-out, the transfer program could be structured in a manner similar to the Earned Income Tax Credit program, which uses a phase-out schedule to avoid work disincentives. Finally, there may be a concern that the program may influence the timing in which parents, grandparents, or other relatives might make transfers to their offsprings so that the children of these offsprings can increase the federal bond support in which they qualify. In order to address this concern, the government could reserve the right to tax future transfers to baby bond recipients in order to avoid the potential moral hazard. So does the public sector have the resources to tackle the racial wealth gap? The answer must be a resounding yes. As was pointed out earlier, the federal government's ability to raise $70 billion for TARP, along with the additional $2.5 trillion to aid the ailing financial system by April of 2009, is indicative of the government's ability to raise and leverage substantial sums of funds quickly. In addition, a 2004 report by the Corporation for Enterprise Development, CFED, estimates that even before the current financial crisis, the federal government allocated $335 billion of its 2003 budget in the form of tax subsidies and savings to promote asset development policy. Right? So we have an asset building policy already. The bulk of this allocation comes from items like mortgage interest deductions, exclusion of investment income on life insurance and annuity contracts, reduced rates of tax on dividends and long-term capital gains, and exclusions of capital gains and debt. The total allocation, which is about 15 times higher than what is spent by the Department of Education, does not include subsidies or tax breaks given to the Department of Education, does not include subsidies or tax breaks given to corporations, nor funds from state and local level policies. More recently, a 2009 budget estimates this allocation at close to $400 billion, with more than half of the benefits going to the top 5% of earners. So at issue is not the amount of this allocation, but to whom the allocation was distributed. The top 1% of earners, those typically earning over $1 million a year, receive more than 1/3 of the entire allocation, while the bottom 60% received only 5%. Furthermore, individuals in the bottom 20% typically received a measly $5 benefit from these policies. Perhaps, if the federal asset promotion budget was allocated in a more progressive manner, federal policies could be transformative for low-income Americans. In sum, to address the enormous and persistent racial wealth gap, we need to shift our policy focus from subsistence transfer programs that are aimed at income maintenance to bold, transformative, sustainable policies that lead to asset enhancement. Primarily through tax credit, the U.S. government is already engaged in an asset promotion policy totaling nearly $400 billion per year. Unfortunately, the bottom 60% of earners receive only 5% of these proceeds. In contrast, a baby bonds proposal would be far more progressive, opportunity enhancing, and a lot less expensive. So ultimately, our ideal should be a race-fair rather than a race-neutral America. For this to occur, transmission of racial economic advantage or disadvantage across generations would have to cease. Public provisions of a substantial trust for newborns from families that are wealth poor and the passage of a Full Employment Act will go a long way towards achieving this ideal.
Thank you, and I should say for the record, I gave Chapel Hill in Michigan their shout-outs. He also worked at Yale University for a couple of years, this little school in New Haven.